CVD divergences is a great way to find trades, especially scalping on lower time frames. This is the 1 minute chart right here. And you can see I have taken a short from up here. I've also taken a long from down here. And both of these trades, I actually did use CVD divergences to get into. And of course, the way I like to do it is after I realize a profit, I like to move the stop loss to the entry to guarantee a winning trade. And then I let the rest of the trade run in case we break out of this kind of triangle shape that we have to the upside or to the downside. But what exactly is a CVD divergence? A CVD divergence is basically absorption. Okay, we can go to a tool called coinlines.net. It's a totally free tool. You can create a free account. Then we can go to indicators and type in CVD, cumulative volume delta, and open interest. And basically what these two tools will show us is what are the whales doing, right? We got to trade with the big money here. We don't want to trade with the retail that's FOMOing long and short. We want to trade with the big money. And what CVD divergences can show us is what are the whales looking to do? So the market is basically moved by buyers and sellers. If there's more buyers than sellers, the price will go up. If there's more sellers than buyers, the price will go down, right? If there's more buyers than sellers, the price will go up. If there's more sellers than buyers, the price will go down. Well, what if there are more buyers, right? There's more buyers, or we'll just say that the buyers are greater than the sellers, right? There's more buyers than sellers, but the price goes down. This goes against what we would expect, right? Because we know the market is moved by buyers and sellers. So if there's more buyers than sellers, but the price goes down, what is this telling us? This is telling us that there are whales manipulating the price. They're actually building orders in the opposite direction. So let me explain. If we come up here and we see that there are more buyers than sellers, and yet the price continues to get lower, this means that there's a whale up here, and this whale is feasting on the FOMO retail traders, right? These retail traders are FOMOing long at the top because they think price is going to go up. Meanwhile, there's a whale, and he's filling up a big limit short order. Now, you have to think about why would a whale be doing this? If you're a whale, you can't just market buy or market sell huge positions. You have to build them slowly. And you can only, let's say, build a sell position if there's somebody else opening up buy positions, right? If I want to sell something, I need somebody who's willing to buy. So if I'm a whale and I know a lot of people are FOMO buying up here, well, this is a perfect place for me to build a big short order and push the price back down. Now, the way we can tell that this is going on is by looking at our CVD and our open interest. If you see that price has come up to a key zone of resistance, which it had, because, by the way, this was a key level of resistance, which we gave in the Casper Crew VIP Discord this morning when we were looking for our trading levels. In the Casper Crew VIP Discord, we did we gave the exact swing long from 21.4. We gave the exact swing high from 25 to 85. These are both the swing trades I still have open right now. And we take scalp trades in here as well. So this was a key level that we had on our chart. So it was a key level of resistance. And by the way, if you want to join the community where we give the levels, the trade setups, we do 3 live streams a day. You can go to patreon.com/Jason Casper. Also, if you want to take advantage of this volatility on an exchange like ByBit without limit fees, because those fees can really eat into your profit, especially if you're scalping on low time frames, check out the link in the pinned comment or in the description. If you deposit $100, you also get a free month of the Crypto Fusion trading bot. For more information on that, check out jasoncaspertrading.com, where we have a 20% discount on our trading courses that go into full depth scalping, day trading, and swing trading tutorials, as well as how to use good risk management, changing the way thousands of people are approaching these charts. But for more information on the bot, you can go to the Jason Casper Trading Bot link, and you can get a month free of that tool if you deposit $100 on ByBit. So we know we came up to a key zone of resistance, and now what we're seeing on coinlines.net is the following. Key resistance, and we see the price is getting lower. It's making lower highs. CVD, this is telling us, are there more people buying or are there more people selling? If this line is getting higher over time, this is telling us there are more traders buying than selling. So if there's more traders buying than selling, but the price is making a lower high, that is called absorption. The whale is absorbing those long orders, building a big short order, looking to push the price down. Okay. Now, what we also want to look at is open interest. Open interest is telling us, are there more trades opening or are there more trades closing? Absorption can only happen if there are more trades opening than closing. Why is that? Because absorption can't be happening if there's no new trades being opened to absorb. right? If we think we see absorption, if we think there's more buyers and sellers based on CVD and price, we need to also look at open interest. Because if open interest is going down, we know there's actually nobody buying here and price is being moved for another reason. So we also want to see over time this open interest is increasing. So open interest is telling us, are more trades opening or closing right now? We can see more trades are opening. They're opening long, yet price is going down. That means there's a whale looking to short. Now the opposite is true on the bottom. We came down to the Fibonacci golden pocket, which was a key zone of support right here. And what happened as we hit this golden pocket? The exact opposite. We saw that as the price was making a higher low over time, right here, price was getting higher over time, continuing in the uptrend. Yet over time, there were more people shorting than there were longing. And also over time, we see, especially as we come right down there, a big increase, especially right here, of open interest, right? The exact opposite at the golden pocket, showing us absorption. So this is a very powerful tool, and you don't just want to take trades willy-nilly using this. You also want to make sure that you have somewhat of a key level of resistance or support. We're looking for this to happen at key zones of resistance or support, and we can see this happening all over the place. For example, last night, after we got the big move to the upside, this was actually a super juicy trade. We came down to about 23,578, and we came up to about 24,600. And I was actually able to take a trade from pretty much almost the exact bottom, but close it out at the exact top. It was pretty much by luck, honestly. I was trying to front run another level and just so happened to hit. But if we go back in time, and so I just bragged and then said, nah, it's actually nothing that I did. So I don't know why I just did that. But make sure to like the video while I'm rambling to myself. Let's take a look at what happened at that high, right? Because this is actually super important. We could see that price made a very significant high and then made a lower high. And we see that the CVD continued to get higher. Retail traders were FOMOing long. Whales were building big short positions to push the price down more. And then we made an even lower high, and we saw even more retail traders FOMOing long, right? This is a massive whale building massive position to push the price down. And what happened after we saw that? Wow. Look at that crazy drop, right? Look at that crazy drop. These are the types of things you want to look out for if we're coming to a key zone of resistance. And we absolutely were coming to a key zone of resistance up there. We did have some levels of resistance at this zone. So that is a CVD divergence. That's how you're going to use it to get into trades. And it's actually a really powerful tool, especially when combined with some other tools that I'd like to use, such as Market Cipher. But that's it for today's video. May God bless you all in Jesus' name. Even if you're not religious, I pray you're super blessed. And I'll see everyone in the next video. Peace.